biggest question I get as a mortgage advisor each day is, Dan, should I lock in or should I float? Well, today, my expectations might change a little bit. Why? We're getting an inflation number today that we haven't had in about 2 months. What's it going to come in at? Well, that's what we're going to talk about in today's video, folks, because if you're watching this video, maybe you're a homeowner trying to refinance. Maybe you're a home buyer trying to figure out what can I budget for. Maybe you're a realtor or loan officer just trying to figure out how to explain these things to your clients. So my goal each day is to come in and explain to you guys what in the heck's going on with those and the whys behind it. Well, the news we got today, folks, is the PCE, the inflation number that the Federal Reserve monitors. Let's get over to it, what the expectations are, because we haven't had this news in, 2 months, because we've been in a black hole. So here's what the Federal Reserve monitors. This number is coming out today, this morning, okay? The unemployment numbers, yeah, they monitor this. They say this is their biggest issue right now, but this has been staying pretty flat. So now where's the inflation numbers going to go from here? Because this can be a market mover and actually might adjust my thoughts on should you lock or should you float. So let's get over to the news and you decide. So here's what the markets are waiting for right now. The markets are on hold because they're saying we're waiting for those key inflation numbers to come out. So let's break down these numbers, folks. Okay, so here's what we're going to get. We're going to get the PCE. The PCE is the number that the Federal Reserve monitors. You're going to see 4 numbers coming out, okay? They might get a little confusing, so let me take that confusion out. You're going to get things that say core PCE, and then you're going to get an MOM over this. This is core PCE month over month. This is core PCE year over year. If you scroll down through here, you're going to also get PCE month over month and PCE year over year. What this means is the PCE, that is all the inflation numbers. The core means they stripped out food and energy. The Moneyball number is right through here, the year-over-year number. Now, the last reading was 2.7, and you can actually see that right through here. It's 2.7 with the Federal Reserve monitors. Okay, well, the government and the analysts are coming out right now saying it's probably going to go to 2.8. So how would the markets react to this? Well, here's my expectations. I don't think they're going to react much at all because analysts are already predicting a 2.8 handle. So if it comes in at 2.8, I think we'll be okay. If it comes in 2.7, it'll be even better. So let's say inflation spikes. Well, that's bad news, but I don't think it's going to be. We see every day we come in and we talk about oil and everything else that it affects inflation, and nothing's really out of whack right now. Even food, if you really dive into food, food prices aren't up considerably where they were a year or 2 years ago. I know a lot of mainstream media says otherwise, but you can fact check me and let me know down below. But my expectations are I think the PCE number is going to come in at 2.7 or 2.8. I don't really think anything different than that. So I think the markets are going to go, phew. Okay, so let's see how the bond market's faring so far with this. So each day what I do is I log into the bond market to figure out what the mortgage rates are going. No, they're not the 10-year Treasury that you look at. It's the MBS. This is a mortgage bond that trades on Wall Street that actually determines your mortgage rate. So if you don't have access to this, you're a loan officer, you're a realtor, just subscribe over there. Every day, watch my videos for 5 or 10 minutes. You'll get a whole gist of what's going on. So how do you read this bond? If the price of the bond goes up, which you're seeing over there, if that chart goes up, mortgage rates go down. That's not the yield, that's the price of a bond. So you want the price to go up because the higher it goes up, the yields come down. And because that's a mortgage bond, that's what's going to happen. Here's where we can help you, especially homeowners right now. Look how volatile the markets are. It's up, down. You go to a 6-month chart, it's all over the map. It's everywhere. So how can you try to refinance and really get the best rate out there or have somebody track it for you, kind of like a broker? You ever use a stockbroker say, hey, I like NVIDIA, try to find me an entry point. Wonder if we could do the same thing with me. Well, I created the Rate Watch 2.0 tool. So if you're a homeowner right now trying to figure out should you refinance, does it make sense, put your mortgage information up there. We don't sell it. I'll review it and just tell me what interest rate you'd be considering refinancing. What I'll do is I'll call you, text you, email you. We'll go through the numbers. Okay, if it makes sense, we'll lock in. But let's talk now to those out there that are possibly, let's say, realtors, or you're looking to build or buy next year. What should you do? Well, here's my expectations on what these numbers are going to come in at. I don't think they're going to shock in all the numbers or the rates. So I don't really think there's going to be some stability over the next few months. That's in my opinion. I think tariffs are going to become illegal. But the Trump administration is already going to have in place things to offset that. So I think between all this, I don't think we're going to see a mass increase in inflation. So I think rates are just going to be stable right through here. My expectations for the next Q1 of 2024 or 2026, is 5.99 to 6.375, exactly where I was in Q4, because there's really no catalyst just yet to really change those. Now we're going to have a whole new cast of characters at the Fed come May. So if you're looking long term to build, you're in great situation. inflation. You're looking to buy in the spring. I don't think you're going to really see rates much different than where they are today. They could be maybe a 0.25% higher, 0.25% lower. That's not going to affect your payments as much as it did people in 2021. So let's get over to my expectations. Should you lock or should you float? I'm still a proponent of locking if you're closing within 30 days. So if you're closing within 30 days, lock it in. Don't worry about it. Enjoy the holidays, Christmas, New Year's, whatever else holidays that you might enjoy, and just enjoy them. But if you're closing in February, March, I don't think you're going to have any issues. But just make sure you're fully qualified. Make sure you get pre-approved, not pre-qualified. Okay, visit us right through here. Folks, like I said, I'm licensed in all 50 states as well as Puerto Rico. Here's a cool thing about the bank I work for as well. We're set up with over 30 other lenders, okay? This is how we compare rates for you with over 30 other lenders. You can't do that on your own. That's why when you're signing up for Rate Watch 2.0, make us do the heavy lifting. But if you're looking to build or buy, reach out to us. We'd like to make sure you're on the right budget, making sure we are using the income that banks use, making sure you're using the right credit score. Do you know you have 35 credit scores or more? Okay, and making sure for sure you're in the right program, because the program can make a difference of your payments going up $100 to $300, or maybe making housing a little more affordable for you and your family. So my expectations are lock them in under 30 days. Other than that, float away. But join me this afternoon at 1:30, because we're going to have this information that's coming in today from the economic calendar. We don't have these numbers just yet, but I'm going to go at 1:30. I'll give you a recap of this week. I'll also show you what's coming down the pike next week on what will be affecting rates. And because my goal each day, if you're a homeowner, you're a home buyer, you're a realtor, you're a loan officer, is to help you understand what in the heck's going on with those and the whys. Thanks for watching. See you this afternoon. Bye-bye.